Thank you, Fernando. Could you, I think it is live streaming now. If you could please make me the host back.
Yep, give me 1 second. I'm just going to make one change. Allow me 1 second.
And also please share the link so that we could share it with other panel members as well as other colleagues to put in their social.
I shared that yesterday. So there's a page for the event. So that's the same is uncdf.live joint. I'll send you the link now.
Thank you.
Abhishek, may I ask you a question?
Absolutely.
So Preeti is opening, and then will each of the high-level speakers at the beginning, will they just pass? For example, will Preeti say, and now I pass to Usha, and Usha will say, now I pass to Maria? And then who's introducing the minister?
Maria is introducing the minister.
Oh, great. Okay. And so basically I wait for him to conclude, and then I say thank you, and then I take it? Or do you think Maria will do that? Or we'll see?
I think if Maria joins, we can discuss, but it would be more, maybe Maria could pass it on to you and then you could take it from there.
Yeah, perfect. Okay, great. Thank you.
Back to you, Abhishek.
Thank you, Fernando, for your help.
Do you want me to put the screensaver on it, or are you fine with having the
It would be good if you put a screensaver now and start at 9.
Okay.
Thank you.
Let me just so the way it works basically is either I share my screen with a full screen on, or I leave it to you to do that. I think it's preferable that you do that.
Okay, so what would you, we would change the view to just the panelists, only the speakers being shown on the screen and not only the people with videos being shown on the screen.
So this is how it would look. This is what I was thinking.
Okay. Yes, this works. And then there are no presentations, so we could just have the speakers once we start.
Should we turn off our video when we're not speaking?
No, dear. I think when all the panel members can have the videos on, we will, all the others who are supporting you will turn our videos off. So only the speakers would be seen.
Okay, thank you.
Abhishek, this is Elaine. My video is not on, but I have a background. Can you see it correctly, or is it mirroring?
Yes, I can see the background.
Perfect. And it's correct?
Yes.
Thank you.
We have the YouTube link in the chat if you would like to share it on your social media, etc., for this event. Fernando, Nasser is saying that it's not the YouTube link, it's the link to the page. Could you please guide him on that?
Yeah. I'm gonna send it in a minute. Just yes, I'm just updating the website with the right link. I will share with him in a minute.
Thank you. And if you could also share with the panel members here the right YouTube link. Thanks.
should be working.
So we're using our website for that. That link that I shared, it takes you to the live stream video that is in the page. So it's the same. I prefer that people will actually look at the website, although I can share also the YouTube video as well, the YouTube link.
That would be great.
Hello, colleagues. Good afternoon. Can you hear me?
Yes, we can hear you.
I'm just testing the microphone and making sure everything's on place. Thank you.
Thank you. Fernando, yeah, I was wondering if you could remove the screen. I just want to test that all the panelists can be seen side by side in a gallery form. Okay, great. And maybe.
Sorry, Abhishek. I just wanted to confirm for logistics purposes, the latest panelist who joined, I assume would be Preeti.
I don't think it's Preeti. I think it's colleagues from Malawi who joined through their office. They are all in their office, I think.
Understood. Should I change the name or hold on until we have?
Yes, let's hold on for confirmation.
Understood. Thank you.
Maybe check the recording will be available later, right?
Yes, it will be available later. Absolutely. We'll start the recording in just a minute once we have all the panelists join.
And I can get off when? No. I mean, I don't know if I can. Let's see. Well, I could, but then I have to prepare for the bilateral and so on.
Hi, Fernando. Could you stop the sharing so that we could just check with all the panel members?
Joining, 1 second.
Where am I?
Good morning.
I don't
Good
see
morning, Preeti. We will just change your name and title on the.
Okay.
We're just waiting for Miss Usha Manari and also for our colleagues from Malawi to join. And we'll start the session in just a couple of seconds.
Thank you.
Couple of minutes, sorry.
Ms. Manari just joined.
Okay. Sure, we'll just edit her name.
this one.
Good morning, Usha.
Good morning. How are you?
I'm good. Good. Good morning, Lisa. Who else is here?
Good morning, Preeti. Good morning, Usha.
Hello, good morning,
colleagues.
Lisa, Abhishek,
Good morning.
colleagues.
Thank you for joining. We're just waiting for the setup in the Malawi office with the minister and with the RC. I'm just waiting for the confirmation.
Sure. Hello, dear. Hello to everybody on the call.
I was on mute. Good morning, everyone. Good to see you.
We're in similar colors today, dear.
Exactly. Let me fix that camera.
I didn't get the memo. That's not fair. Did I go change? I could probably change. I probably have time.
Yeah, a little bit in the logo behind, Lisa. Hi, Jean-Philippe. Nice to see you too. Sorry, just.
Yes, good morning. How are you?
Good, good. Thank you for joining.
Oh, pleasure. Thank you for having me.
Of course, it's our pleasure.
Mr. Minister will just be joining. There is some last minute change, unexpected. So I'm in touch with their office and they will start in just a minute. Sorry about the delay. Good morning, everybody. We will now start the webinar for today, and I'm requesting Ms. Preeti Sinha to start the conversation.
So good morning to everybody. Good morning, good afternoon, good evening. I'm delighted to be here on behalf of the UN Capital Development Fund. My name is Preeti Sinha, and I'm proud to serve as its Executive Secretary. So at UNCDF, our vision is to really leverage the development impact of capital to strengthen growth and inclusiveness in countries. And we are pleased to bring to you today this Build Fund on Malawi, which we hope will do exactly that in the case of Malawi. Before we dive in, allow me to recognize the Ministers of Trade of Malawi, Honorable Gengwe, who has been gracious enough to join us, and also a warm welcome to Ms. Torres Macho, who is the Malawi Resident Coordinator, and all the other officials who may have joined us, and Mr. Honorable Minister Roy Kachale as well, who has been with us before on a panel. And if I may just extend my warm and gracious greetings to all the members of the Malawi delegation there on the screen with us. Thank you so much for joining us. To set the stage, I would like to offer a few reflections on our work in the blended finance space. And here we have today with us all our partners who work with us in this space. So as we aspire to be the UN's flagship catalytic financing agency, especially for the LDCs, we want to carve out a niche in the UN development system through our ability to offer financing and structuring solutions that support the development in the LDCs. The Build Fund, which is UNCDF's best-in-class structured blended finance vehicle, exemplifies our commitment to delivering innovative financing to frontier markets. It is structured as an open-ended fund with 3 classes of shares: senior, mezzanine, and first loss, with UNCDF providing the catalytic first loss tranche, along with partners, to crowd in commercial investors. UNCDF is able to provide capital for the first loss thanks to the gracious contributions of its donors, including Luxembourg, which had made the visionary inaugural investment into the Global Build Fund and is in attendance today as well. The Global Build Fund broadly allows investors to invest in SMEs in the frontier markets through a mix of debt and equity instruments with an average ticket size of at least $500,000 US. At the same time, the architecture of the fund allows for more targeted and thematic and geographical sub-funds or sub-windows that can be tailored to different investor specification. The Malawi sub-window or sub-fund of the Build Fund, which you will hear a lot more about today, is a great example of this. It is mobilizing additional financial resources for Malawi, helping, we hope, to reduce poverty and hunger by increasing investments in sustainable agriculture, manufacturing, and supply chains. By investing patient capital in promising businesses, the Build Malawi Fund aims to support at least 37,500 households, integrate 75,000 small-scale producers into the investee supply chain. This will increase SME incomes by 30% and create at least 6,000 sustainable jobs, including 3,000 jobs for women and youth. The joint Sdg Fund process was instrumental in generating proposals across the UN system on innovative and blended vehicles. We are happy that the joint Sdg Fund joins us here today. UNCDF was fortunate to be 2 of the 4 winners of that process, Build Malawi being one of them. We believe, as shown through this process, that UNCDF can and does play a critical role in the UN development reform process, specifically because of our demonstrated ability to collaborate within the system to scale up SDG positive projects. This is a key focus for us in our new strategic framework 2022-2025. In that vein, UNCDF intends to build on the successful engagement in the joint SDG Fund financing window to further strengthen its enabling role to create innovative financing instruments within and outside the UN system whenever possible. These lessons would not have been possible without both the joint SDG Fund and UNDP, who connected UNCDF to the Malawi connections. UNCDF and UNDP collaborate quite closely on a range of initiatives, and the joint SDG Fund also deserves special praise as its contribution to the first loss layer of the Build Malawi Fund was critical. I'm very pleased today that UNDP joins us as well. As I close, I would like to offer a word on the work that is ongoing to bring more capital into this space. UNCDF recognizes that no single entity alone can resolve the complex challenges and opportunities of scaling up sustainable finance solutions, especially in the LDCs. Our blended finance report on the LDCs, co-authored with OECD, has highlighted this point again and again. The collaboration with the UNDP and the joint SDG Fund is a powerful example of the trusted relationships to catalyze SDG investments in local economies through blended finance. I can't say on behalf of my team that we could be more proud to be here today to have achieved this level of success, and we look forward to doing more. With that, I'd like to recognize everybody else who's joined us, including Ms. Tia Martin, Mr. Jean-Philippe de Cheval, and everybody else who will follow. But now it's my great pleasure to hand over to Ms. Usha Ramanari, the Associate Administrator of UNDP, for her keynote address. Thank you very much. Over to you, Usha. Thank you.
Thank you very much, Preeti, and thank you for your opening remarks. Honorable Ministers, Excellencies, ladies and gentlemen, it's truly my pleasure to participate in this very important side event to discuss the importance of financing the SDGs, particularly in least developed countries. The UNCDF is indeed playing a very key role, Preeti, in this area, with its ability to deploy loans and guarantees, as well as create innovative financing instruments like the Build Fund. And we're very proud to host the CDF. Thank you. At the outset, please, Honorable Minister, allow me to congratulate you, sir, and the government of Malawi for their pioneering work on finance, including through the blended finance facility, which will be discussed today. Ladies and gentlemen, here at the UN, we believe that we are at a unique moment in history where responding to the pandemic and the challenges posed by it give us an opportunity to use the SDGs as a roadmap to chart a course to greater resilience in the future. In fact, it is our contract with people and the planet for a better future. Adequate finance will be critical to making progress, and we're working with governments around the world to bring the SDGs to the core of decision-making on public and private finance and investment. The challenge for financing the SDGs continues to grow, however. The OECD, as you probably already know, estimates the financing challenge to have increased during the pandemic by 50%. That's startling. In 2020, with the gap reaching almost $4 trillion. To close this gap, we need to better mobilize and align financing flows with the SDGs. And we would only need to align 1% of the estimated $379 trillion in global wealth to do so. Admittedly, this is a big stretch, and that's why we're all here together to talk about how we can do that. Here, I would like to highlight 4 areas where the UNDP, CDF, and the broader UN development system can provide support on both mobilizing and aligning finance for the SDGs. First, we believe that you have to align policy and finance to achieve any sort of success on the SDGs. In this respect, I commend the government of Malawi for its work to put in place an integrated national financing framework to deliver its national growth and development strategy. This is crucial. And the INFF will be a critical framework for ensuring policies across public and private finance, and to ensure that they're working to align investment with national development priorities. This is something UNDP is working with a number of countries around the world on. Second, beyond policy, however, we need more financing instruments to de-risk and crowd in finance, enabling investment in the SDGs to go to scale. One of the issues that I have always had is that there are many attempts, many instruments, many approaches, but they are not yet at scale. The blended finance facility we discussed today is a great example of something that can indeed go to scale. Third, we support greater transparency and accountability for how finance impacts the SDGs. This was the rationale, actually, for UNDP's launch of SDG Impact in September 2018, which is pioneering the standardization of impact measurement and management to link financial products to the achievement of the SDGs. I'm pleased to announce that the joint SDG Fund will pilot the OECD UNDP impact standards at the country level in its catalytic investment portfolio in 4 countries, and will encourage the consortia and financial vehicles that it supports to adopt these SDG impact standards for enterprises, bond issuers, and private equity funds. As we go forward, and I'm personally involved in a number of initiatives around the world, transparency and accountability in this area are becoming vitally important. As Malawi's INFF shows us, we must not measure development impacts only in respect to innovative finance instruments. All financial decision-making needs to incorporate consideration of development metrics. So it's not just finance and dollars and cents, but it's impact and results at the end of the day. Allow me to finish with the 4th and perhaps most important area for focus: more and stronger partnerships. We cannot do this alone. The scale of transformation we're looking to achieve the SDGs requires the type of partnerships that we're demonstrating today across the UN, governments, and the private sector, as well as with international financial institutions and other actors such as Bamboo Capital. UNCDF's partnership with Bamboo Capital Partners to create the Global Build Fund is a great example of blended finance in action, something that the world has been trying to aspire to and to achieve. And it is the theme of today's event. This fund demonstrates how different parts of the UN system are working together to catalyze greater private sector financing into some of the most challenging markets that we operate in. The initiative we discussed today is a model for us to follow, in my personal opinion. We are grateful for the donors who have provided resources through the joint SDG Fund to enable this pioneering work. UNDP looks forward to working with UNCDF, the joint SDG Fund, the government of Malawi, the private sector, Bamboo Capital, and other partners to make this ambition achievable. I thank you.
Thank you, Usha. May I now pass the floor on to the resident coordinator of Malawi.
Good afternoon. Good morning in New York, and this is a great pleasure for all of us to be here today. And allow me to acknowledge the presence of 2 of our most important lead ministers in this endeavor, Minister of Trade and Minister of Industry are both here with us, and the country team here present from the Malawi side. And obviously, we're welcome to our USGs from UNCDF and UNDP. Allow me to just articulate a bit a couple of ideas that I think my predecessors have already explained very clearly what is the project about. But I think something that we find particularly pioneering and important in this program is because we are materializing something that is in the road to Doha. Malawi is the chair of the LDC group in Africa. And I think one of the most important claims for achieving the vision of the government to have a Malawi in 2063 that's a middle income country is precisely to materialize the ambition of have access to finance. So I think this is one of the most important areas that I think the project touches upon. I'll speak a bit to that. Second, there is no possibility of organizing such a pilot program without risking, without embracing innovation, but most importantly, embracing partnerships. And I think this is exactly at the core of our cooperation framework in Malawi that is running from 2019 to 2023. And the third point I want to make is about connecting the global with the local agendas and seeing how we can actually together be stronger and providing solutions to the people of Malawi that are really putting the ideas and the partnerships and the initiative. So allow me to go first on the Doha agenda. Actually, one of the most important aspects of the road to Doha by this General Assembly, and you are following the debates right now, is happening just that we had an SDG moment in the General Assembly, is precisely to really tap more and more on good practices, lessons learned, and then replicate and escalate with suitable. And I think the fact that we are coming together with the leadership of the government of Malawi to look into one of the very pioneering experiences on blending finance, actually it is leading the way on some of the talks that are happening also in the LDC context. So really, I want to absolutely thank UNCDF for the initiative and the joint Sdg Fund for co-hosting this very important event and giving us the opportunity to really speak very briefly to this point. And because this is also framed in the context of the climate crisis and a post-COVID-19, the efforts to rebuild societies is forcing us to think faster out of the box and coming with imaginative solutions. We have no doubt that blending finance should be at the remit and be accessed by LDCs, and Malawi is going to be one of those countries proving this is possible. I really want to acknowledge and really thank my colleagues, because it's a lot of work that has gone into coming together and bringing this program together by the country team Malawi, particularly UNDP, FAO, and of course UNCDF with the expertise that they are providing in terms of blending financing. And the fact that the joint Sdg Fund really allowed us to realize a long-standing dream. Actually, this is a lot of work that has happened in the previous years. We are seeing Malawi being very ambitious in the achievement of SDG agenda. They have a very important vision for national development 2063. They have come last year in 2020 to present their voluntary national review. And as our USG from UNDP, Usha Rao, mentioned, they are implementing the integrated national financial framework, which is a very concrete step towards achieving the financing of SDGs. So we are seeing in Malawi a very important combination of local-led efforts and a leadership agenda also for the LDCs in the way to Doha. In the context of the Malawi country team, this program is really to materialize a vision that has driven the country team in terms of bringing innovation, but also bringing together the best capacity of the country team. And the idea of blending international and national resources with private, it is really trying to achieve expanding the space of the private sector, SMEs, and giving opportunities to those who might not be venturing into these innovative sectors. Now, the areas in which we are working bring together the three pillars of the UN country team in Malawi. We are speaking about strong institutions working on social capital, climate action, and sustainable development. And the bill represents very clearly our ambition to support the government and the people of Malawi efforts to really recover back better after COVID. The president was very clear in our recent climate conference that Malawi is determined to recover green, and therefore this effort is going to be represented by this coalition of the Malawi country team, bringing together UNDP, FAO, and UNCDF to really achieve that very important aspiration. We are building on capacities that have been already established at the level of the country team. There are years of work on by UNDP and FAO in tapping into capacities of smallholder farmers, startups, cooperatives, SMEs. With the Growth Accelerator, UNDP taps also into the issue of innovation and young people, which is extremely important. And the whole area that we are discovering thanks to the bill is really to achieve that level of capital that we were missing, that is going to be taking the risk and showing the lead to the banking system also in the region. And we are hoping really to see a transformational way of doing business in Malawi. So really, I want to thank and recognize the great effort of my colleagues who are sitting here, because I'm just representing them on this fora, but they have been the ones really showing success already within many years of work. And I think they are ready to, under the leadership of government, to continue partnering. Now, the role of the joint SDG Fund and the work of the country team Malawi, I think it is, when we are speaking about the SDG Fund in New York being catalytic, I think this is a brilliant example of how you are helping to materialize an ambition of the country and also the country team. You are allowing, and I think the debate in the panel is going to tap into that, how best blended finance can support development and improve investments and really achieve inclusive development. Because I think the whole area of looking at the SMEs who are being assessed against the bill and look at the social impact, how many women, the young people that are going to be employed, the type of innovations that are going to be supported because they want to do business differently. And because we are embarking, as I was mentioning, in a green Build Back Better after COVID. I think this is a great example, and we will absolutely second the call of my colleagues, of my predecessors, in thanking all those member states who already supported us in making this possible and inviting others who are interested to come back to us and see how we can really enhance this portfolio and actually break this mantra that only the most complex issues can be done in developing countries. I think Malawi as an LDC is ready to show the way. And I think we are together going to be put in a path to success. Allow me to introduce our Honorable Minister of Industry, Roy Kachale, who is going to speak on behalf of the government, and thank very much our Honorable Minister of Trade, Sosten Alfred Kengwe, and his team for really making this possible. And under their leadership, really, we are hoping that in a year's time, we can also present a number of achievements. Thank you very much.
Good afternoon from Malawi. Good morning in New York. The UNDP and the Secretary General, Ms. Usha Rao Monari, Executive Secretary for the UNCDF, Preeti Sina, the UN Resident Coordinator in Malawi, Ms. Maria Jose Torres Macho, the Head of the Secretariat of the Joint SDG Fund, Lisa Corbriel, CEO of the Bamboo Capital, Jean-Philippe, Deputy Director of the LDCIP, Fabrizio Cometo, representatives of the Development Finance Corporation, Daya Martin, ministers present, ladies and gentlemen, distinguished guests and friends. On behalf of the Malawi government, and indeed on my own behalf, I wish to convey gratitude to the United Nations for organizing this important event. The event is taking place at the right time, as most LDCs are preparing for the two global events, namely the UNCTAD 15, which will be held early October, and also the 5th United Nations Conference on the Least Developed Countries, scheduled for January 2022 in Doha. At present, the world is turning its attention to the LDCs because of the political momentum behind these two multilateral conferences. Your Excellency, last week, my honorable colleague, the Minister of Trade, led our colleagues, LDC ministers, in the LDC Ministerial Meeting, which developed positions for the LDCs as we prepare for the two conferences, and the outcome of the meeting was the adoption of a declaration that has articulated LDC's positions clearly and strongly. Your Excellency, LDCs find themselves in an especially difficult situation at present. While our countries have been able to weather some of the worst effects of the COVID-19 pandemic, our external vulnerabilities mean that we have not been able to shield our economies and societies from the most pernicious negative impacts of the pandemic. The setback we have suffered risks wiping out much of the progress that we have had previously and painstakingly achieved on our route towards sustainable development. As some parts of the world are slowly recovering from the pandemic slump, many LDCs, including Malawi, continue to struggle with depressed exports, plummeting fiscal revenues, rising external debt, and worsening social outcomes. Unless these trends are countered effectively and immediately, the present situation might be the prelude of another lost decade in the development of most of our countries. Under these circumstances, it is crucial that the LDCs are assisted as we struggle to keep afloat. As also argued by the Least Developed Countries report of UNCTAD, international support to the LCDs is not an example of charity vis-a-vis our countries and our peoples. Rather, it is the consequence of the realization of the deep meaning of the Leave No One Behind motto of the 2030 Agenda for Sustainable Development. The interdependence of different economies and societies lies at the back of the core made in 2015. The reality of such interdependence has been laid bare by the developments of the COVID-19 pandemic. The global community will not overcome the ongoing collective threat that COVID-19 presents as long as the pandemic continues to linger in the LDCs, hence the call for strengthened international solidarity. Looking at the ongoing developments, it is clear that the LDCs need to embark on a strong recovery from the pandemic slump. It is not a matter of building back better, but rather one of building forward differently. The prevailing model of the economic development and the economic interdependence that we have followed so far have not served the LDCs adequately. This is made clear by our persistent external vulnerability, persistent poverty, and the repeated unmet targets of successive programs of action and the slow pace of LDC graduation so far. We call on our development partners to renew and strengthen their development partnerships with LDCs. This should take a concrete form, enacting new forms of support to our countries and societies, and in this case, the topic of blended finance with a special focus on the Build Malawi Fund, a structured blended finance vehicle that aims to mobilize $35 million for investing into private sector enterprises in Malawi is crucial today. As government, we appreciate the continued support that the United Nations has been providing to Malawi in the area of private sector development. Your Excellency might be aware that Malawi ratified the 2030 Agenda for Sustainable Development in 2015. Malawi also domesticated the SDGs in its long and medium-term development plans in the year 2020, the Vision 2063 of becoming an inclusively wealthy and self-reliant nation. This shows how Malawi is committed to the achievement of these SDG targets. I am pleased to mention that Malawi has made some strides in the achievement of these SDGs. However, just like any other country, and as clearly stipulated above, Malawi has been limited to achieve some of the targets due to the COVID-19 pandemic, which has affected government capacity to implement some of the planned interventions that could have otherwise brought more impact. Your Excellency, I am happy to note that by providing affordable access to finance to our private sector, the Build Malawi Fund will help to reduce poverty and hunger by increasing investments in sustainable agriculture and other manufacturing sectors of the economy. Specifically, the fund will help unlock the challenges that our private sector is facing in accessing investment capital in the potential areas. Precisely, our private sector has a challenge to access finance, which affects the survival and growth of SMEs and large companies in Malawi. Many entrepreneurs are of the opinion that it is very difficult to access funds, especially investment capital. This is attributed to a conservative financial sector, which prefers to concentrate on more business with risk profiles that they find acceptable. Furthermore, stringent requirements by our commercial banks make it difficult for enterprises to access investment capital. Also, alternative sources of funding are not readily available or accessible to most such enterprises. As such, there is need for deliberate interventions to provide affordable sources of finance such as concessional commercial debt, equity, grants, and other innovative financial options. Your Excellency, this facility has therefore come at the right time, when Malawi is just about to launch its National Export Strategy 2, which seeks to improve and upscale exports from Malawi to the region and international markets, capitalizing on the preferential market access privileges that Malawi enjoys, such as the Africa Continental Free Trade Area, AFCFTA. This requires a lot of investment capital in sectors which our export agenda is prioritizing, namely agriculture, manufacturing, services, and mining sectors. Therefore, as government, we are in full support of these innovative financial instruments, such as the Build Malawi Fund. In addition, I call on our development partners to renew and strengthen their development partnerships with LDCs through the provision of such financing, since they have an impact in terms of creation of jobs, as well as the provision of incomes to mostly the youth and women. In view of the impact these will bring to the economy, it is crucial to ensure that the UN and other partners at national and regional level need to review your commitment to the LDC development, and more importantly, the United Nations systems needs to reaffirm its commitment to continue to work together with LDCs as we move towards Doha. Private finance to LDCs further needs to be increased, and the concentration of sectors to benefit from such financing needs to be enhanced to such areas such as capacity building in research and innovation, value addition that promotes industrialization, amongst other areas. Your Excellency, honorable ministers, ladies and gentlemen, I thank you very much for your attention.
Mr. Katali, honorable guests, thank you so much for your intervention. We are delighted to be connected live with all of you in Malawi from here in New York. My name is Ldc Kerbiel. I'm the head of the Joint Sdg Fund Secretariat. I'm delighted to now moderate the next segment of our side event here at the United Nations General Assembly. It's an exciting moment for the international community as we look to the leadership of the United Nations with all stakeholders to really, as you just said, Mr. Katali, to build forward better. So we're very thrilled to highlight all of this joint work and innovation in Malawi. A bit of housekeeping for all of our attendees. If you would like to place a question in the chat box, of course, please do so. Please let us know who you are and your question, and we'll weave those in after we have our esteemed panelists speak. And before I move into our panel discussion, I would just like to give a particular moment to one of our participants, Mr. Jean-Philippe de Schrebel. Jean-Philippe is the CEO of Bamboo Capital. You've heard Bamboo Capital already referenced by many of our speakers. And we'd like to just give him a moment just to unpack a bit, what is Bamboo Capital? Why is it such a critical partner in this particular equation? And then we can go into more specific questions and I'll introduce the other panelists. So Jean-Philippe, I pass to you. Thank you.
Thank you very much, Lisa, and good morning, good afternoon, everyone. It's a pleasure to be with you, although remotely from Geneva today, but hopefully in person in the next few months. I was not planning actually to speak too much about Bamboo. We are an impact asset manager. We've been around for 15 years, and we have a global presence. But I wanted mostly to speak about the Build Fund, of which we are very proud, and that we co-created with UNCDF, and we are now co-managing. In my opinion, the Build Fund is really a new generation impact investment fund. And I say that for a couple of reasons. Number one, it's managed by, I think, a groundbreaking partnership between a UN agency, UNCDF, and a private sector impact fund manager. And both bring their, I think, complementary experience and capabilities. If you wish, on one end, decades of experience and in-depth knowledge of local ecosystems, extensive presence on the ground in target countries, deal sourcing, technical assistance capabilities, And then on the other end, almost 2 decades of rigorous and discipline-proven investment and portfolio management expertise. Second, the Build Fund is a much needed financing instrument because it channels capital to early stage SMEs working in the least developed countries in sectors which are essential for the welfare of the poorest segments of their populations. Right? We are going to tackle and invest in food security, in access to clean energy, in financial inclusion, in local infrastructure. And the Build Fund addresses head-on the difficulties faced by the SMEs in the least developed countries to get access to financing they need to grow, the so-called missing middle. Third, the Build Fund, and that has been said already, is a structured blended finance investment vehicle where catalytic capital, and such as the one received by the joint Sdg Fund, and thank you for this, de-risks and catalyzes private sector investors, enabling them actually to get a very attractive risk-adjusted financial return, and of course at the same time an opportunity to deliver deep, lasting, and measurable impact on some of the poorest population in this planet. And then last but not least, and Preeti has said that as well, the Build Fund is open-ended, which means that it does not have a programmed end of life. And it also means that it can envision growing to very significant assets under management over time. And so for those who are new to the Build Fund and who are listening about the Build Fund for the first time today, it's certainly not too late to join us. So please do so quickly. Thank you, Lisa. That's what I wanted to say about the Build Fund today.
Thank you so much, Jean-Philippe. And you're starting already to reach out to many of those who are tuning in or who may be able to listen to this later online. Colleagues, without further ado, I'm delighted to introduce the additional panelists to Jean-Philippe, Mr. Fabrizio Cometto, who is Deputy Head of LDC Investment Platform at the United Nations Capital Development Fund, Ms. Dia Martin, who is Managing Director at the U.S. International Development Finance Corporation, and Ms. Cecilia Rice, who is Managing Director of Astrel Trading in Malawi. So colleagues, the Joint Sdg Fund received over 150 proposals in response to our call for innovation SDG accelerators or catalytic investments that could really leapfrog and ensure that we unlock some of the private sector resources that we know are so critical to reach the SDGs. And it's really exciting for us at the fund with all of our critical partners to see this initiative becoming a reality. And a special appreciation to the colleagues in the government of Malawi, who of course, without your leadership, this would not be possible. Now, when we announced our $41 million grant across our first group of countries, it was really the ability to be a catalytic investor to the Malawi Fund on behalf of our donors that made this historical for us. And it's through the Capital Development Fund, who is co-hosting and of course, leading this work on the ground, that we were able to give our first $6 million in first loss capital to de-risk the mezzanine layer that is now open to commercial investors. And what we're hoping at the end of this gathering is that many tuning in will seek an opportunity to invest in Malawi. And that you'll see that the UN is pivoting into this space. It's bringing the expertise, and that a project like this, as has been highlighted by Preeti, Usha, and Maria, is really building on decades of work by UNDP, by FAO, in supporting agri-markets, in helping companies obtain those initial commercial loans. And it's also the unique positioning and capacities of the Capital Development Fund of the UN to actually deliver that capital. And of course, pairing that now with Bamboo, a reputable fund manager, it really is sort of a perfect storm for acceleration. So maybe Jean-Philippe, before I pass to the others, we really are celebrating a bit at this moment. We're really trying to put the pieces in place to deliver on the 2030 promise. Can you just maybe go into a bit of the factors that attracted Bamboo Capital as a private fund manager to create the Build Malawi window, right? So you've given us a broad stroke understanding of the decades of experience in the Build Fund, but now you created a special window. So can you give us a few of those details? What made you attracted to Malawi? And of course, why would investors on the line actually want to join us in this investment?
Right. Thank you, Lisa. Well, I'll start by maybe repeating what I just said at the beginning. You know, for a private sector fund manager focusing on least developed countries and financing SMEs at their early stage of growth, having the chance and the opportunity to team up with UN agencies, and in this case here, not only UNCDF, but UNDP and FAO, in a specific country approach is actually something very powerful for us, right? Because, as I said, we are teaming up with teams on the ground with lots of capabilities to source, to bring technical assistance, to monitor, to report impact. It's not something we do easily in isolation. This is really teamwork, and that's actually very exciting to see a partnership forming between, you know, 3 UN agencies and a private sector investor focusing on a specific sector in a specific country. And I think, you know, that's the way, you know, the way to go. And getting the de-risking, you know, first loss tranche, catalytic tranche from the joint Sdg Fund is, of course, something absolutely critical to the success of the fund and the enterprise. And as you said, we hope that others will join in, and so that we can scale the fund. The second, if you wish, for us was the natural continuation of what we had started with the global sub-fund. You know, just to repeat maybe briefly at the cost of possibly the danger of being a bit too technical, but the fund we structured is an umbrella fund in which we can open as many sub-funds as we wish over time. You know, this is an open-ended fund. We have, you know, the future ahead of us, and we can structure sub-funds as we wish as we move along. And this is important because, as you well know, some investors, governments, DFIs, donors may have specific country focus, specific geographies that they would like to focus on. And I believe that with the Build Fund, we offer an option to them to actually create additional sub-funds, additional strategies that fit their needs, but without having to recreate investment vehicles each time they think about something. And basically what we offer here is an option for those government, other agencies to essentially build investment facilities faster, cheaper, and more efficiently. And that's a great advantage, I believe. If you wish, we would love to see the Build Fund as a one-stop shop for all UN agencies and, you know, and investors and governments willing to focus on helping SMEs in the least developed countries. That's something that, in our opinion, is very efficient. And that's why we embraced, of course, immediately the idea of focusing a first sub-fund on Malawi, given the partnership, given the opportunities. And I'm pretty sure Fabrizio will discuss those and what we're seeing, which is an active, vibrant pipeline in Malawi and SMEs waiting for the financing to arrive. And we are dying actually to start working and investing, and we're happy to launch this initiative today. To your last point on why investors should invest, well, you know, I'm sorry to say that it's a no-brainer. They should invest in the senior tranches of the fund. First, because, and that's important for them, they will get a very attractive risk-adjusted financial return, right? When you look at the level of the first loss protection that is being provided to private investors, I will not go as far as to say that this is a risk-free investment, but it's not that far. You know, it would take us to do a very, very bad job to lose the size of the first loss that we are, you know, receiving generously from you. And so the level of protection is high. That's why on a risk-adjusted basis, the return we're offering is actually very attractive. And of course, at the same time, if you realize that the fund will be generating very deep and lasting impact, and will actually support entrepreneurship in the country that needs it, and will have very positive spillovers and action on social grounds, economic grounds, environmental grounds. It really becomes a no-brainer. You get a risk-adjusted return, and you get to actually contribute to creating very significant impact. And maybe to finish, an investment in a sub-fund like the Build Malawi sub-fund is actually something where you get the best of two worlds, right? You have a group of United Nations agencies working together in a very coordinated fashion, teaming up with an independent private for-profit asset manager, making sure that investment decisions, will also guarantee their financial returns alongside a very significant impact. That's something that, I think an increasing number of private investors, especially from the younger generations, is really aspiring to. So I'm very hopeful. I'll say one last word, if you don't mind. I think a Build Malawi fund can attract not only global capital, but also regional and local private investors. And that's certainly our hope, and we have a couple of discussions going already. And finally, we always touch on this question of scale, right? And that's certainly an important dimension here. The sub-fund is open-ended. This is just a start, and we can grow the assets. We can develop over time. And my sense is that this open-ended feature, coupled with the capacity for the sub-fund to actually issue loans, issue bonds or notes, and even tailored programs of notes and bonds over time, will possibly, and I'm hopeful about that, will possibly attract very large institutional investors going forward. Of course, we have to walk before we run, and that's what we're going to do starting tomorrow. And starting from now, whoever has a $250,000 ready to invest in an impact fund should be well advised to do that in the senior tranche of the Build Malawi fund. So I'll stop here, but that's what I wanted to share with you, Lisa. Thank you.
No, I think it's really exciting to hear from your perspective about how you are de facto with the UN building a turnkey situation where the due diligence, the feasibility, the de-risking, the structuring is done, and it's been vetted, and it's blessed by government, and it's ready to move. And I think this is really exciting. I think distribution of tools like this, the socializing of this, is how we really rely on so many other partners, because we need to get people to that no-brainer as soon as we can. But really, thanks so much. It's really exciting to watch the Build Fund in all of its windows. Moving on to Fabrizio, again, the Deputy Head of LDCs at the Capital Development Fund. Fabrizio, welcome. Thank you for joining us. CDF plays a distinct role across the UN development system. You, in fact, are a hybrid development and finance institution, and you're really created in many ways to tackle what's been called the missing middle. So I wonder, as a start, Fabrizio, if you could just speak about the role of the UN Capital Development Fund, your work in assessing the pipeline, and where do you see opportunities today and going forward? Thanks.
Great, thanks, Lisa, and very happy to be here today. Thanks also to the audience. I'm told that we are live streaming from YouTube, so it's great to be able to speak about these issues with the wider world. So as far as the role of the United Nations Capital Development Fund is concerned in this Build Malawi Fund, I would say that it's a similar role to the one we already have with the Build Global Fund. As Jean-Philippe mentioned, the advantage here is that we are not reinventing the wheel. We are adapting things which are already ready, and we build on that. So first and foremost, our role as the United Nations Capital Development Fund will be to provide the feed for the Build Malawi Fund, which means that we will prepare, we will vet, we will refer transactions to the fund manager, to Bamboo Capital Partner. by doing primarily the creditworthiness and the impact assessment of each transaction before we refer it to Bamboo. Of course, we do the final due diligence and the closing because Bamboo will have the fiduciary duty to the investors. But UNCDF will be the main origination partner. The other role we play in this fund is that UNCDF will also be an investor of record in the fund, because thanks to our mandate, we have the ability to route member states' catalytic contributions, including the one that we generously receive from the joint SDG Fund, into a privately managed investment fund. And this is something which is quite unique. Few agencies within the UN system can do that. And sometimes member states themselves, donors themselves, cannot do that directly. So that, I think, is also another important role. And thirdly, UNCDF will also play a role on the governance side, and we will also contribute to the delivery of investment de-risking business advisory services through the Builder Malawi sidecar TA facility, because there will be the Build Malawi investment fund, but we also will have a Builder TA facility that will go alongside the investment fund. Now, this role is very similar in the case of the Build Global Fund and the Build Malawi Fund. However, in the case of the Build Malawi Fund, there is, I think, a key difference compared to the Global Fund. And the key difference is that here we are making partnerships at their best. You know, this is really a one UN approach, and it's not only UNCDF and Bamboo Capital joining forces. We are also joining forces with other UN agencies, and namely the United Nations Development Programme and the Food and Agriculture Organization. So two other very prominent UN agencies will be involved alongside UNCDF. And let me start with UNDP Malawi. UNDP Malawi is at the origin of this initiative. You know, I don't think we would have a Build Malawi fund without having UNDP Malawi doing all the preparation work that they've done in the country over the last 10 years, especially in terms of private sector development, and in particular by identifying and nurturing early stage promising enterprises through a number of initiatives like challenge funds, et cetera, et cetera. So we're going to build on all this preliminary work, and I think that this preliminary work will be fundamental to the success of the fund. And it's often something which is missing. You know, when you start a fund, the truth is always in the assets. Do you have a pipeline? Here we are starting a fund because there is a pipeline, and it's something that we should not forget. Second, I'd like to acknowledge the role of FAO, the Food and Agriculture Organization. We know that a number of companies in the pipeline are agribusinesses, are focused on agricultural value chains, and the FAO will play a key role in the delivery of tailored technical assistance for the prospects and the investees of the Build Malawi Fund in the agricultural space. So these are the roles. Let me just briefly conclude by telling to the audience, where do we stand today? You know, where are we? Where are we in the development of this project? So we are right now in the midst of appraising the first batch of investments that will be deployed by the Build Malawi Fund. We have already screened 19 different businesses, which all of them had received previous support from UNDP and from some other donor-funded mechanism, either grants or technical assistance through challenge funds. And I believe that right now we are on target to perform due diligence, and the UNCDF team in Malawi will start performing due diligence together with UNDP and FAO on at least 10 of these potential transactions during the month of October. And we do hope to deploy the first investments before the end of the year. But as Jean-Philippe said, this is just the beginning. This will be a story that will continue in time. This is an open-ended fund. But I think that the important message I'd like to deliver to the audience, because we often talk about blended finance, we often talk about starting funds. Here it's not talking anymore, it's walking the talk, if I may say, because this is real, this is live, this is concrete. And we do hope that this will demonstrate to the investment community that Malawi is open for business. Over to you, Lisa.
Fabrizio, thank you so much. Fascinating to hear your view on how it's coming together. A quick follow-up for you. There could be investors tuning in today that think Malawi is too exotic, too risky. It's not in their portfolio. How do we really explain what we're doing and how to ensure that not only have we de-risked this, but there's also a return to be had? Can you just give us a quick pitch to the private equity folks on the line?
Well, I try my best. I think that Jean-Philippe already highlighted some of the facts, but maybe if you allow me, Lisa, I think that the value proposition of the Build Malawi is not only for investors. It is, of course, for commercial investors, but it's also for donors. It's for all the stakeholders that want to bring more finance into frontier markets, including Malawi. I'm also thinking of impact investors, you know. So maybe let me first say that we believe that today we have a gap in the development finance architecture, you know, and this gap is the gap that you have between grant funding and commercial finance. And what we have seen through the years is that donors, if we start talking about donors, they keep supporting private sector development programs. But investors, commercial investors, they keep saying that they lack investable pipeline and bankable opportunities. So here we really have a disconnect. And I think it's time we find ways collectively to fill this gap. And sometimes donors think that by providing grant funding and technical assistance to young entrepreneurs, they will enable these young entrepreneurs to fly with their own wings. Unfortunately, this is not really the case, because for businesses to become investment ready, for more commercial investors, there is a need for a continuum of finance, a continuum of support. And this is exactly what the Build Malawi intends to do, to fill this gap. So that's the first value proposition. To commercial investors, thanks to Build Malawi, you'll have access to these pipelines of investable opportunities that you're struggling to find. And for donors, you will have a natural offtake mechanism that will take over with the support that you've started providing. So this is very important. The other thing is that pipeline is not only a fact of having pipeline of investment opportunity, it's also having a vetted pipeline. You know, often private sector investors, they don't have the boots on the ground, they don't have the presence, they cannot build by themselves these investable pipelines. And that's a bottleneck for the money to come into those geographies. Here we have the UN, which has worked in country with local entrepreneurs, with the government of Malawi over 10 years to build this pipeline, which is a vetted pipeline. So that's another important element. Now, the risk reduction element, I mean, Jean-Philippe said, this is a no-brainer. This is a no-brainer for a private investor, because with the amount of caution that is going to be provided by the first loss piece, again, provided by catalytic donors like the joint Sdg Fund, I mean, this is, I don't want to be too optimistic, but this is, like Jean-Philippe was saying, close to a risk-free investment. And therefore, the risk-adjusted returns you're getting are very, very, very attractive. And last but not least, still now trying to pitch maybe to the commercial investors, I'd like to touch upon briefly the economics of the fund. You know, everybody wants to invest in impactful companies. Everybody wants to invest in frontier markets. But the reality is that when a private investment manager wants to invest in those companies, there is a lot of preparation work that needs to be done. And that preparation work very often reflect in relatively high management fees or costs that have to be pushed down to the final commercial investor. There's no other way of doing it. Now, the Build Malawi Fund, we charge a very reasonable management fee to commercial investors. And why the Build Malawi Fund will be able to do that? Because again, this is a partnership, because we are leveraging the presence of the UN on the ground. We are leveraging all the work which has been done. And therefore, Bamboo, as a private fund manager, will be able to make a living with reasonable management fees that are, I believe, acceptable to commercial investors. So again, not only Malawi is open for business, the Build Malawi Fund is also open for business, and we welcome commercial investors to chip in.
Excellent, excellent, Fabrizio. Well, thank you very much. I think the more details and the more unpacking we can do today, the more answers hopefully we provide. So moving on, I'm really delighted to welcome again Ms. Dia Martin, Managing Director of the U.S. International Development Finance Corporation. Good morning, Ms. Martin. Nice to have you here. I can't miss an opportunity to say how delighted the Joint Sdg Fund was to be mentioned by Secretary of State Blinken on the Senate floor in recent negotiations around the fiscal year 2022 budget, essentially looking at us as an opportunity to leverage precious donor funding. And I think Fabrizio and Jean-Philippe already touched upon that, right? This blending. So we really love Dia, to hear from you about DFC's approach to blended finance. Why is that a critical component of what you do? And maybe, yeah, tell us a bit about the vehicles that you have found attractive and what brings you to the Malawi window. So over to you.
Yes, thank you so much. And first, I want to say my thanks for being here. Good morning, good afternoon, everyone. It's an absolute pleasure to participate in this panel. After the remarks from Fabrizio and John Philippe, what more can I say? It's, as an investor, sign me up. We truly believe that the Build Fund is a compelling example of blended finance and partnership that has a room and a space for every type of investor, whether it's the purely commercial, the impact DFIs such as the DFC, as well as donors in the first loss window or portion of the fund. And we believe that some of the points that I just want to quickly touch upon that have already been raised here today are extremely compelling for us. The DFC, we see ourselves as a bridge to bring in that private capital, to bring together both the donors and the private capital funding, as Fabrizio mentioned. And we see the Build Fund as that proper area or window for us to play in, because it definitely has a lot of the characteristics that we like to see in being very developmental, with the technical assistance, the on-the-ground active support of the SMEs. But additionally, the window for which the capital comes in, or the capital structure, is very amenable for us as an investor. So we're really excited about the continuum and our ability to play a role in that. Second is the scalability of the fund. We always want to participate in funds and activities that are scalable and sustainable. And I think that's very key as we look at the Build Fund and why it's so compelling for us. Again, it's scalable and it's sustainable, and it will have a lasting impact. This is not a 2-year, 5-year intervention, but a long-term window of financing for SMEs. And then third, I think it's the efficiency. For us, there's a lot of efficiency in participating in and looking at the Build Fund. And we see that efficiency in the way that they invest in SMEs that are often too small for us to look at the DFC. So there's a real window of opportunity to see the investment of the Build Fund in these SMEs and supporting them and growing to a size that they could potentially receive direct investment from the DFC. So I also think that's very exciting. And finally, I'd like to really look at the DFC. We've developed a roadmap for impact, and this is the way we frame and look at sustainability across all of our investments. And when we look at the Build Fund, it's very well aligned with that roadmap for impact. First and foremost, as a new DFI, we want to prioritize LDCs. We actually have stated in our roadmap that 60% of our investments should go to low or lower middle income countries. We want to be an active player in these markets, in these countries, and the Build Fund, with its focus on LDCs, is a great window to do that. Also, the priority sectors are very well aligned with the work that we do at DFC. The focus on agriculture, infrastructure, and energy are extremely important to us, and we are very committed to climate. We want to invest in projects that help to combat the climate crisis, result in net zero emission, as well as increasing DFC participation. So we will focus on at least 33% of our new investments being climate related. And we think that the Build Fund has a very compelling focus on climate as part of its impact proposition. We're also really excited about the focus on women and youth and other underserved communities. That's a clear part of our 2X initiative and a priority for our roadmap for impact. So we feel very encouraged about that with the Build Fund. And then finally, to create jobs. This is extremely important for us. And this was mentioned by the minister earlier. We want to empower people across the globe. We're in this together. And we see a real opportunity by supporting SMEs in that missing middle to create jobs and create sustainable income. And then finally, Lisa, I just want to answer your question around DFC's participation in blended finance. We are not new players in the blended finance space. We wholeheartedly believe that blended finance is key to sustainable development. Some of our previous examples of investment in blended finance are our work with the Women's World Banking Asset Management Company. This was actually a joint USG initiative where we invested $25 million in financing to this fund to support women's financial inclusion. This fund was also supported by USAID with funding and technical assistance. And then a second example of our support of blended finance is a recent investment in Root Capital. This is a nonprofit social investor that focuses on credit and capacity building for rural agriculture businesses across the globe in 21 countries in sub-Saharan Africa and Latin America. We were very interested in Root Capital's blended finance approach, especially during the COVID-19 pandemic, and we're able to provide them with financing to continue to scale and grow and support rural communities and farmers in the countries where they work. So we are excited, as always, to see new blended finance initiatives such as the Build Fund, and we're definitely looking at it as an example and an opportunity for the DFC. So thank you.
Excellent, Dia. No, I mean, such a complete and comprehensive answer. I don't have a follow-up to that, but I think it's really exciting for us to see, you know, the U.S. government represented through the DFC and that leadership and multilateralism that is taking seed really through projects like this, both for job creation, for economic empowerment, for poverty reduction. So thank you so much. I'm sure there'll be questions coming from the chat and they are being recorded. So thank you, colleagues. Continue please to send those in. And without further ado, I think, in my opinion, the most exciting panelist today is Ms. Cecilia Rice, who actually represents the entrepreneurs and the small and medium business owners that we're all here to really empower and to help move forward. So Ms. Rice, you are welcome to this panel. You are Managing Director of Estrel Trading in Malawi. And we would love, Ms. Rice, for you to tell us about your experience as a businesswoman in Malawi and maybe highlighting some of your challenges and what funds like this and what colleagues that you're hearing from today might do to be of support to you. Thank you.
Thank you. Good afternoon in Malawi and good morning in the UK. It is a pleasure to be here with you. I'm Cecilia Rice. Before I begin, allow me to thank UNCDF for giving me the opportunity to speak. I'm the Managing Director of Estrel Trading in Malawi. I started the business in 2012, processing groundnut into groundnut flour and peanut butter. I didn't have enough capital to start the business, despite having an innovative idea. I wanted almost 1 million kwacha, but the bank could not finance a startup business, although I had a house which I could pledge as a collateral, reason being that the startup businesses are risky, and also with my income level, I could not qualify for a loan of 1 million. I had to start the business with the little capital I had, and I borrowed some money from my friends, which was just enough to produce samples, which I showed the chain stores in the country, and managed to sign supply contract with all chain stores. In the year 2012, I had 212 stores to supply, and I didn't have working capital. Regardless of that, still I could not access loans from the bank. The demand for my products grew, that the working capital I had was not sufficient. I needed proper machinery for higher capacity, and having been denied loan from the bank, there was another institution, Business Partners, which offered me a loan to procure machinery, security being the properties I had and the machinery to be procured, as they saw the business had potential to grow. This was like an opportunity to me, but it was a very high risk I took. The loan conditions were not good comparing to the commercial banks in the country. The interest rate was higher than the other bank, than the bank lending rate. And there was also loyalty fee attached to it, which was based on their projected cash flow, not on the actual cash flow of the business. They calculated the production quantities according to the capacity of the machinery they assisted me to procure. I borrowed 106 million. I serviced the loan for 3 years. I paid 169 million, and the balance was 124 million. This time the bank now accepted to finance the business using the properties I had and the machinery I bought with the loan from business partners. I then transferred the loan to National Bank. CNFA through Farmer to Farmer program gave me support by sending me volunteers, one of which was a business analyst who advised me to seek for donor support. I then got support from UNDP through MICF. Thanks to UNDP for the support. Now I have the infrastructure, equipment, and I'm also working with 2,500 smallholder farmers. But still there is need for support as the demand of my products still grows beyond the capacity to supply. In accessing finances in Malawi, I faced the following challenges which an entrepreneur like me faces. Financial support which you require for the business depends on the income level you have. So when you're starting up the business, you don't have proper, you haven't yet started sales and you don't have your income level is very low. Loan processing fees are even higher and are supposed to be made before loan disbursement. Even collateral-based loan, if the business has growth potential, access to finance is limited to the collateral you have. You have to pay for the arrangement fees. You have to pay for the arrangement fees before accessing the facility, which include legal fees, stamp duty, registration, valuation of property fees, insurances, processing fees. By the time you are getting the loan, you have exhausted the remaining working capital for the business. The interest rates are also high, and even the repayment structure. Most of the banks, they don't give you a grace period. Once you access the facility, you need to pay after 30 days. If you are investing in the procurement of machinery, it's even when you have received the machinery. Because for us to buy the machinery, we have to buy from other countries like India, China, and other countries. We don't buy machinery locally in Malawi. By the time you receive the machinery and increase the production capacity, it is when you have exhausted the working capital in servicing the loan for the procurement of machinery. The repayment structure of the loan is supposed to be conducive for SMEs so that we should be able to use the facility properly and be able to pay from the proceeds from the facility. Thank you, and hand over to you, Lisa.
Thank you so much, Cecilia. I think hearing the practical side of the hurdles you've had to overcome really reminds us of so much of the detail that some of our rhetoric can miss. And so I really appreciate you taking the time as a business owner away from managing that enterprise to really educate us. Because often I think our programmatic space doesn't get into those details. And I think you've just highlighted many of them. Thank you again. We do have some questions from our audience. I'd like to pass a few to JP, to Jean-Philippe, as well as a few to Fabrizio, if I may. So maybe what I'll do is I'll read out the questions for each of you and then give you a moment or two to consider your answers. Jean-Philippe, we have two questions. One is, how do we ensure that the donor money that may be contributing or de-risking the projects, such as the one in Malawi, could not have been financed without our funding? So is there additionality, a real question there? And the second one is, what solutions are in place to manage the fluctuation of the currency, which I understand is the Malawi kwacha? So those are the two. Would you like a moment, Jean-Philippe? I can go to Fabrizio, or would you like to jump right in?
Actually, thank you for the questions. Actually, it's teamwork with Fabrizio, so we'll bounce back each other, our answers. On the FX, there are ways of mitigating that. Obviously, diversification is not the possibility here because we only invest in Malawi. But a couple of things. Number one, we will be possibly financing export-oriented companies, with revenues in dollars. So lending the dollars and to companies receiving dollars should be a natural hedge. Number two, if there's a possibility of hedging and it's not too costly, we'll consider that. And number three, obviously there's a first loss tranche that can absorb the residual FX risk if needed. So that's that. On the additionality, I mean, that's a recurring question. We are not in the business of crowding out, funding sources, local funding sources to the businesses. But I would just, respond that if there's a role for a Build Malawi subfund, it's precisely because there's not such financing flowing to those SMEs, right? So before we talk about additionality, I'd love to understand how those SMEs are being funded first. And we're here precisely to bridge a gap, not to displace or crowd out anyone, right? And we'll of course pay extra attention that the financing conditions that we attach to our loans are not going to be, excluding other actors that could to actually fund those SMEs. But I don't see them, overly excited to fund the SME sector. Otherwise, our fund would have no reason of being to start with.
Excellent.
But I don't know, Fabrizio, if there's anything else you'd like to add.
Well, maybe the questions I have next for Fabrizio could be a way to bridge that. And we're delighted to take a few more questions from our audience as well. So Fabrizio, there's questions about the structure, the mix of first loss, mezzanine, senior debt in the actual instruments. And what are the financial terms? So they're asking for more of the pricing and tenor of the various tranches. So if you can share any of that. The currency risk, I think, again, Jean-Philippe just spoke to. They're also asking about the actual vetting. How are the transactions developed? How does CDF use local partners and help with that process? And then finally, what are the measurable SDG goals? So can we actually align, some of these investments specifically to specific SDGs? Is that part of the process as well? So Fabrizio, over to you.
Thanks, Lisa. And maybe before I try to answer those questions, I just want to go back very briefly on the additionality question, if you allow me to, because I think it's a very important one. And I think, and let me be blunt, I think it's a little bit a rhetorical question, honestly. We have heard the minister, and the honorable minister say that banks are not investing in SMEs in Malawi, and this should change. We've heard also an entrepreneur. We've heard Miss Rice, and we heard a story about how difficult it was for her to get a loan. So I know that additionality is very important, especially when we're using public money. I know that we shouldn't distort the market. I know that we shouldn't crowd out the private sector. But the reality is that certain players of the private sector currently are not willing to do the job. And so what do we do? Do we keep this gap unfilled, or we try to do something about it? And I think that Build Malawi, as Jean-Philippe said, is not at all an initiative which is meant to crowd out the private sector, all of the contrary. But it's an initiative which is there to bridge that gap and try to bridge that gap. And for me, what is really important is that those deals get done. Because if those deals are not done, nobody else will do them, and we will stay in the same old situation where there is a missing middle. And we won't be able to show the way to commercial banks, to private equity funds, to pure commercial investors, that these deals are actually bankable and can be done. So I think really there is a gap. I think Build Malawi will help fill that gap. And our objective is, of course, to show the way to the private sector, and maybe also give them what I always say, a little bit of FOMO, a little bit of fear of missing out. We are doing those deals that you guys could be doing. So the next time around, be my guest and do them. I think that's maybe it's a little bit harsh, but it's a message I'd like to deliver. Now on the specific questions, I think that on the FX risk, Jean-Philippe has already responded. On the structure, again, Jean-Philippe, please feel free to chip in. But in the issue document of the Build Malawi Fund, we're envisioning 3 tranches of equity, Class C, Class B, Class A, which is a first loss tranche, mezzanine tranche, and senior tranche. catering different type of investors. Of course, this is a blended finance structure. So you have a structure where basically risk go bottom up. If there is a default or an FX loss, the first tranche that will be hit is the Class C share, which is the first loss share. And then it will be the mezzanine, and then it will be the senior, whereas returns are going top to down. So the first investor getting paid the return are the holder of the Class A shares, the senior shares, and then returns will flow down to the mezzanine, and if something is left, which we believe it will help capitalize the first loss tranche. Now, in the case of Malawi, we believe that it might be difficult in the very beginning to capitalize the senior tranche. So the issue documents have a senior tranche which is there, but we believe that maybe it will be easier in the first time to capitalize with Class C and Class B, which means first loss and mezzanine. But again, we do welcome purely commercial investors. And most probably also, like for the Build Global Fund, there will be also space for some notes. I think Jean-Philippe also mentioned that we sit on top of the three layers of equity. So that's on the structure. I don't know, Jean-Philippe, if you want to add anything.
No, that was perfect, Fabrizio, and indeed this is this is something we've seen in different initiatives in other funds. There's a mechanic, there's a dynamic to the development of the fund. Of course, we need to start with the first loss, and hopefully then the mezzanine kicks in very quickly. Then we build the portfolio. Then maybe we are being helped by some note providers that will leverage the fund with not a dividend but an interest rate that's low enough so that if we do our job well, we will create revenues and additional track record. We will, of course, capitalize further the first loss, and then pretty sure then the senior, very senior Class A share will be appealing to private investors, and it's a virtuous cycle. But we need to start the engine somewhere, and it's going to be with the first loss, the mezzanine, and hopefully some notes to help us with the leverage. Of course, all these being kept within careful proportions between the tranches and the notes. But that was very clear, Fabrizio. Thank you.
Thanks. Maybe let me address the question about how we vet the opportunities and how we could collaborate with local partners. So basically, the initial idea is that really the vetting of those businesses will be done by the UN system, because the UN system has people on the ground, UNDP, FAO, UNCDF. At UNCDF, we have investment officers. UNDP, as I said, work with those businesses for a long time. So there is already a lot of information which is available. There is an history, that we have developed over the years with those businesses, which is also a way, by the way, to de-risk the investments for the private sector. It's not that we're going to pick some random SME out there and start working with them. We've been working with those SMEs for a long time. So that will really be our role as the UN. However, this is all about partnerships and building coalitions. This is an initiative which is bringing together different stakeholders, UN entities, private asset manager, the government of Malawi, etc. And we do welcome any type of collaboration with organizations, stakeholders that are in the Malawian ecosystem, as it relates to developing entrepreneurship and supporting the private sector and SMEs. So how can we work together? Well, basically, if any local incubator or accelerator in Malawi has businesses they've been working with, we do welcome referral. We can look at those businesses and then maybe try to provide them with the funding they need to grow. Potentially in the future, we could also decide that we could work with some of these players in the ecosystem to vet the transactions. At this stage, I don't see it really happening in the short term, because again, Bamboo is the fund manager, and Bamboo has a fiduciary duty to investors, and they are the one that need to take the investment decision. UNCDF has a role in referring. I think we're going to start deploying capital that way. But again, why not in the future develop new collaborations and use players in the local ecosystem that can bring pipeline and that can also help us vet that pipeline. So yes, very open to partnerships. And last but not least, on the SDGs, well, this is an SDG fund. It's everything we do is about trying to achieve the SDGs. Maybe we forgot to say that loudly enough during the panel, but the raison d'etre, I would say, that of the Build Fund and the Build Malawi is to bring finance in LDCs to achieve the Sustainable Development Goals. So the Build Fund and the Build Malawi Fund have an impact thesis, which draws clear lines towards different SDGs. We won't be covering all of the 17 SDGs, of course, because there is also an investment thesis and we will invest on in specific sectors. But yes, everything we do, every investment we do, we have a clear line of sight on an SDG and clear impact metrics that we will monitor to measure the achievement of that impact towards the SDGs. Over to you, Lisa.
Fabrizio, thank you very much. We're really delighted that colleagues tuning in are asking these detailed questions, because it shows that we do have a very motivated audience. So thank you so much for that. We don't see any additional questions in the chat. And I really want to, as your moderator, your humble moderator, want to thank all of our esteemed panelists. I know Ms. Minari had to dash off to an additional UNGA event. It's a very busy week here in New York, but we thank her in absentia. We also want to thank Jean-Philippe, of course, all of our panelists in Malawi, the esteemed minister, Mr. Katali, resident coordinator, Maria Jose, Ms. Dia Martin, Ms. Cecilia Rice, and of course, Fabrizio, Preeti, of course. And before I pass to Preeti, in case there are anyone, colleagues tuning in who are not ready to join at the mezzanine level of investment, there is another way. And we're really delighted as the Joint SDG Fund. We did launch our first ever Donate Now button yesterday when the Secretary General opened the General Assembly yesterday at the SDG moment. So you do now have an opportunity to actually make a donation to actually support these programs, not only the technical assistance that goes out to those colleagues at the country level, but also to the de-risking of the investments. It's really blended finance directly from your credit card or your Venmo account into the work of the Joint SDG Fund. So we would really welcome you to pass that word around and share it on your networks as well. So thank you again from the Joint SDG Fund. I pass over to Preeti for the closing remarks.
Thank you, Lisa, and what a wonderful panel. I'm so glad that we were able to go into depth as well, and I hope those answered some of the questions that were posed. So dear guests, special guests, distinguished guests, we're so pleased that you were able to join us today. The reflections of everybody who spoke added a depth of richness to our discussions and to the blended fund and to Build Malawi Fund. And really for us, it's an honor and a privilege to be here today with you and to take this work forward. I think what we can all agree that capital should serve humanity. And particularly in this time, after this terrible COVID pandemic and the economic crisis we see, it's more and more important that we find ways in which capital can serve humanity. May we never lose this mission. As I close, I'd also like to thank all the teams involved in this effort, and it wouldn't have been possible obviously without you, and it's been such a busy time here at the United Nations with our General Assembly kicking off, and I'm sure that you are all very clued in to what's going on, but we hope to report more as to what happens in this important General Assembly. Before finally closing, I might just tell you that we have another couple of events that are interesting, and particularly for Malawi, I'd like to invite you on the 23rd on a Sovereign Borrowers Conference, where the ministers may join us, where we will be discussing how more access to capital markets could be provided. So with that, thank you to everybody present who spoke, Lisa, Dia, Jean-Philippe, Fabrizio, Abhishek, Madame Cecilia, the ministers in particular, Maria Jose, and everybody else. With that, thank you so much, and we'll close the session.